Is the euro about to break out or break down? We got tensions heating up in the Eurozone, inflation cooling, the euro dollar sitting on a knife's edge. You're going to need to see this. Welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these absolutely insane markets. If you like what you see, smash the like button, hit subscribe, share my videos far and wide. I want to build a huge trading community. Let's get straight into it. The euro dollar pair is currently sitting right around 113.50 after a brief attempt to push a little bit lower, like we said, and we're going to get into that in a second. The session has been muted so far, but under the surface, there's a lot going on, right? So let's just get into like the macro view of this thing. Let's go over to the short-term chart, and I'll tell you where I made my mistake yesterday. I've been a little rusty with the euro. I haven't really been trading the euro, as I said. You know, I'm doing it because a lot of people say, do some euro analysis, do euro dollar analysis. A lot of people that trade this currency, so it's kind of like the Deutschmark back in the, the late 80s, actually from 1973 all the way to like 1999. There was a lot of people. Well, sorry. The euro, the Deutschmark actually lost itself in 1999, 2000 with the European Union. I don't remember the exact dates, man. It doesn't really make a difference. But anyway, so we got a tale of two economies going on here. In Europe, the services PMI came in stronger than expected, signaling some resilience, which is good. But at the same time, the producer price index dropped more than forecast, and that's a red flag for inflation, cooling faster than, the ECB would like, right? So over in the U.S., traders are still digesting new tariff news. I mean, the guy comes out with a tariff on foreign movies. What the freak, man? Donald, come on, leave it alone, man. So it's that spooked the markets in the beginning, and it put downward pressure on the dollar, especially against the yen, right? So anyway, let's zoom in. Let's talk about what the heck is happening right now. Most important information. All right, yesterday I said that when we were up in this level right here, like the 113.58. Actually, I think I started talking when we were right around 113.30 at the time. And I said that I believed that the marketplace was going to basically gravitate lower and break this trend line and head down to 112, like say 60. Well, we didn't quite make 112.60. We made the low at 112.79. So where was my error? Well, my error was the trend line break was good. And I'm not going to sit there and tell you, I did short the euro at like 45. So I wrote it down, and I escaped at a piece at 113.05. And the last piece I got out last night by the skin of my teeth at 112.80. I said the target doesn't look like it's going, and I wanted to go to sleep. So it was around 9 o'clock p.m. Eastern Standard Time. But where did I make the error? So when I come over to the 1 hour chart, what I should have been looking at, I could have been using, a trend line like so. Let me just see where. Let's just put up a trend line off the 1 hour. I'll try to make it cohesive with what happened. Yeah, here was the 112.92. Here was, say that, well, come on, man. What's up with that, Yeah, here's basically the 4 hour break, the 6 hour break, right? So the marketplace broke this was the 1 hour plus the 6 hour trend line, right? Where the marketplace started coming down, I should have been looking at like a close in here to take a target at. Like this low bar's close would have been perfect to say escape here. Now, of course, I didn't, all right? I mean, I went a little bit low. I got a little irrationally exuberant, but that close on that 1 hour was an important point. Now, if you understand, technicals, and I talk about this a lot with Fibonacci, a lot of times what people do and I made the damn mistake doing it, is they basically, when a marketplace is breaking down, they're targeting the low, which is like right here on the 1 hour, right? Which would have been that, like near that 60 level that I was thinking about. However, markets generally gravitate to the low bar's close, not so much the low of the bar. So look at that, 78 was the low bar's close. Right here is another low bar's close. Like you could have used any one of these low bar closes as targets on the 1 hour for a short-term trade. I didn't do it. I made the stupid mistake of doing what most people do and went down to the low and said, yeah, I would like to get them back there, of course. But really, if you look at this low bar's close, the 1 hour spike, low bar's close right there was absolutely a phenomenal place to take a profit. Look, I mean, it came right to it. I don't even know if it touched it. Yes, it did touch it because it went to 78.80, and I got them back at 81 right there. Look at that. So it's an important little lesson right there for you that if you're trading, right, and you're in a good trade and you're looking for a place to escape or looking for a place to zoom in on price action, you're going to want to zoom in on the high bar's close or the low bar's close. And I'll see if I can give you another example of that. In this market structure right here, as we were moving up, we made this rally high right there. That close right there is an important close, okay? Now, as the marketplace was coming up, this is a 1 hour chart. We were riding the trend line up, right? We came down, we retraced, right? Now, let's look for a low bar's close in this area that, where the market actually decided that, hey, we're going to turn from there. Just to, what the heck, for, good old shits and giggles, right? I mean, what the heck? Let's get rid of this guy if I can. Get rid of it. All right, so right here, low bar's close right there acted as a very good support or a reversal point for the movement up. Now, if you were long this, you'd be targeting like that close instead of that high. You would be targeting the close. If I go down one step, and I'm not trying to fit the data, but like this ultimate high bar's close is right there. This marketplace came within just a few pips from it before it turned down and broke that trend line. So I'm just giving you a quick lesson on how you should focus on like the closes, not so much like the lows and the highs. And I go over this in my Fibonacci course that I'm going to be putting out. It's going to be freaking awesome. So stay tuned for that, because if you're into Fibonacci trading, I'm going to have some really good stuff in that. All right. So anyway, what's going on right now? Oh, well, all right. So let's go over, we'll stick on this 1 hour chart. Let's get rid of this trend line right now. We don't need it anymore. We just need price action. So right now, as we said, we got resistance. I'm going to tell you, we got resistance right here, 113, say 70, right up in here. Okay, next level, I'll go up to the higher close for the resistance level right here. So as it stands right now, euro dollar has to hold 112.95 on the day right now in order to show any strength, okay, to continue strength to try to get up through this level. If we pop up through this level, we're going to have resistance at 114, like 05. There's the next level of short-term resistance at 114.05. So if you didn't get long, it's a little bit tough to just go jump in and get long right now. But really, I think that because of what's going on macroly, plus with the Fed, we're waiting for the Fed. The clear support right now is like, say, 112.95, 113, the figure. On the upside, we're really slightly capped at 113, say, 70. And if we can get a break above that 113.70, let's say, for instance, the Fed comes out and says, yeah, rate cuts coming, right? Well, there's going to be a pop, and I think that we could target a fast follow through through the 114.05 to 114, say, 50. something like that. I don't really see the euro really taking off right now. There's a lot going on with the euro yen, and there's also a lot going on with sterling yen. So the crosses themselves pretty weak. So that's what I got going on right now. So as a short-term trader, you got resistance right up in here. A break down and a break of like, say, I'll even go as high as 113 the figure. Let's go like 113 the figure. A break of 113 the figure is going to test that 112.79. A break of 112.79 is bringing us down to the lower level of like 111.90 short run. So that's what I got for you guys right now. Remember, tight ranges, offering, proceed big moves. So don't get chopped up in noise. Follow the points that I've been talking about. Wait for confirmation. Wait for your trade levels. Manage your risk. And remember, always, always head over to Park Avenue Trading and get yourself a free ebook on breakouts. And remember, enjoy the party, but dance near the door. Cheers.